Here's how to use your 401k passively for retirement. And the only reason why I make this video is for educational purposes, and it's not meant to give you financial advice or anything of that nature. But I wanted to make this video because a lot of people don't know that they can use their 401k money to invest in other assets. And a lot of times they get employer contributions, they have their cash sit in the 401k, and they don't do anything with it. They don't invest or anything. They just have that cash sitting in there all the way up until retirement. And that might not be the best way to go. So if you're looking for alternatives and looking for other ways that you can get that capital and cash to work for you, then here are some ways that I can introduce to you on what you can look into. And maybe this is something that you can go ahead and explore. Now, again, I'm not suggesting that you do so, but this is an option as to what you might be able to place your 401k for, so you can gear up for retirement and you can have the capital work for you passively. So let's just dive right in. Hey, my name is Hayato. I manage and own a real estate fund, and I have absolutely nothing to sell you. Cool. So let's just dive right into it. Here's why people use a 401k, right? Taxes. With a traditional 401k, you don't pay taxes until later. The Roth 401k, you pay taxes now, but not when you take the money out. Obviously, if you follow the rules. The second is free money. So a lot of employers match your 401k. Maybe they don't, maybe they do, but if they do, you have extra money added to your account, which is a huge bonus, and that's why a 401k can be super beneficial. Number three, bigger limits. So you can put in more each year than with an IRA. And number four, easy saving. Money comes right out of your paycheck and goes straight into your 401k account. And so that makes it that much easier to invest into 401ks and have more money going into it. A lot of people don't even think twice about money going to 401k. Some people forget, and you might have ample capital and ample cash to be able to invest through a 401k. So it could be something that you want to look into. And lastly, protection. 401ks are often safe from creditors unless you commit like major fraud, or unless you have taxes that you owe to the government or whatnot. Then they might come after you. However, 401ks can be safe from many creditors in the case that anything happens to you. So this is why a lot of people like having cash in 401ks, and why it's so beneficial to be able to utilize 401k into investing into many different assets. Let's go into the different type of assets that you can invest in with your 401k. But before we go into it, there's some things to watch out for. So number one, you can't use 401k money for yourself. So you can't buy a house for you or your family. You can't use the 401k, take it out and use it to just pay yourself. That's something that you cannot do. Self-directed accounts, you're going to need a special custodian for that. And some employers don't let you roll money out until you leave. So these are some things that you have to look out for when you are trying to utilize your 401k. But you can always speak with your current employer, your past employer, and then what you are looking to do in the future to see if that's something they're able to work together alongside with you for or not. So just keep that in mind. Now, let's go into the main ways that you can invest. Number one, you can stay in your 401k. So if you're currently employed and you have a 401k with your current employer, you can use that cash to invest in index funds or target date funds or REITs. And these are going to be very simple, easy to sell. There's going to be no extra steps. You can just purchase them right there and there typically, and you can just look them up, figure out what index funds you're looking to purchase, and just invest, set it, and forget. Very easy, and it's very liquid too, so whenever you feel like you want to sell it, you can do so as well. Number two, you can roll it into a self-directed IRA or a solo 401k. And what this is going to allow you to do is it's going to allow you to invest in other options. So maybe you're only allowed to invest in certain REITs with your employer 401k, but if you roll those over into a self-directed IRA or solo 401k, your options become bigger. So you can invest in more REITs, or you can invest in additional real estate funds. So private real estate funds and syndications. And you can even use that money to lend privately, or notes as we call them. So if you don't want to stay in index funds and stocks, and you don't like how volatile stocks are, and don't want to just invest in a REIT, which is a real estate investment trust, because of the fact that it's like just buying another stock, but for a real estate company, and you want to actually have ownership of real estate, then this allows you to do so, which is the big difference. And so let's go into the type of investments that you can get into if you decided to roll your 401k into a self-directed IRA or a solo 401k. So again, number one, you might have more options from a public REIT standpoint. You can buy shares of real estate companies. Like I mentioned, it's easy to get in and out of, but it's kind of like the stock market. It's tied to what the market demand is, and the price is determined by the market. So whether a REIT does amazing and sells their building and makes a lot of profit and gets great cash flow from the building, that doesn't necessarily directly affect you. It can be an upside for you and the stock may go up, but again, not directly correlated with the increase of your stock shares. So that's something to keep in mind. You also won't have direct ownership or the direct upside from when the building sells or when it cash flows, right? Because you're just buying into the shares of that company. So that is a downside, but again, it's very liquid. The last part here is that an employer 401k might allow you to invest in these public REITs without transferring funds. So it's a big plus if you didn't want to transfer your funds to a solo 401k or SDIRA, your self-directed IRA. But if you wanted more options, then that could be a possibility too. Now, if you did roll over, here are some other options. So you can invest in private REITs or funds. You can have passive ownership in real estate. So if you wanted to eventually buy multifamily and you dreamt of maybe buying an industrial warehouse, or maybe you wanted to get into the retail space, whatever commercial real retail space, like a shopping center, whatever it might be, you can actually have passive ownership in those different types of asset classes in real estate. And the benefit is the operators manage everything. You don't really necessarily have to find the deal. You don't have to put the deal together. You don't have to analyze the deal. You don't have to get the financing for it. That's what the operators for these real estate funds do and real estate syndications do. With that being said, you can be 100% passive in the ownership of these buildings, but still get to participate in all the upside, which is amazing. And when the building cash flows, or if the building exits, because you own a certain percentage and have ownership of whatever it is that you're investing in, you can get distributions if the building cash flows. And if it sells and exits, you get distributions and payouts for your portion of how much you own as well. So you get direct upside from investing in these. Now, the downside is that it's not as liquid as a public REIT. And if you want to see how you can do this step by step, 100% passively, I can just send you a free breakdown for you. It's the first link in the description. I'm not trying to sell you anything. If you're interested in partnering, though, and co-owning multifamily with us, we're not in the retail space or we're not in the industrial warehousing space. So that's something that we can't really partner on. But if you wanted to partner and you actually wanted to co-own these buildings while being 100% passive, and you wanted to learn about how that works, then click that link in the description. Go through it. It's completely free. And if you want to book a call with myself or my team, we'll be happy to walk you through how you can navigate it and answer any questions that you might have. All right. The other option that you have is notes and lending. You can act as a lender, and it's not as passive. You're going to have to figure out who you want to invest your capital to. But once you do find someone, and you have to obviously analyze whether a deal is great or not, whether or not that person you're lending to is going to be risky, whether the deal is risky. So all these things you're going to have to go through on your own. But if you lend that capital, you can get interest payments on the money that you lend. So let's say you lend $100,000 to a fix and flipper, and they were going to flip a property. They're going to pay you 12% on a yearly basis. You give them a 1-year short-term loan, and they are bound to pay you 1% a month, right? And so that's something that you can do. There is risk if the borrower doesn't pay back, but that is something that you have to go through. And the big thing with the notes and lending, again, is just not as passive. Lastly, you have private equity and other alternatives. So you can invest in private companies or other funds run by pros and other operators. Again, this is going to be passive, usually long-term, not as easy to sell, but you can go into many different alternative asset classes. So if you identified a fund, let's say, that invests in other private companies, kind of like a VC, you can invest in those companies and it will be passive. You just have to do your due diligence and you have to know whether or not you want to invest in those small businesses or startup companies, or maybe startup companies that are growing quite rapidly, whatever it might be. You get to choose whether or not you want to invest in those, but that is an option for you as well. Now, all these different funds may or may not allow investors to come in based on their criteria. Many times you're going to have to be what is called accredited. So for an accredited investor at the moment, the way the SEC defines it is you either make $200,000 per year or more individually, or $300,000 or more per year with your spouse joint, or $1 million in net worth excluding your primary residence. If you're an accredited investor and meet any one of those criteria, that's what the SEC considers you as an accredited investor for, and you'll be able to participate in pretty much all of these opportunities that you have. If you're not accredited, you may be limited as to what you can get into, so that's something that you might have to look into. Now, lastly, how to move your 401k money. Pretty easy. So if you decide that you want to roll over your past employer's 401k and move it into an SDRA or a solo 401k, you first need to pick a custodian. Then you need to open up your SDRA or solo 401k account. You can ask for a direct rollover. Just wait for your funds to transfer, and then you can go ahead and choose your investment, whether it's a public REIT, a private real estate fund, whether it's a syndication or a fund, or maybe an alternative fund, or if you want to lend notes, choose whatever investment and asset class you want to place your investment in. But that's pretty much it. I know this was a very high overview as to how you can invest your 401k for your retirement. It may help for you to have and know that these options are available to you, so that if you didn't want your capital just sitting in your 401k account doing nothing, these can actually provide you some sort of return. So again, use this information to your discretion and feel free to do more research on anything that I brought up here. I just wanted to share that these are ways that you can invest your 401k money into something that can produce a return for you. Hope this helped. If you have any questions, leave them in the comments, and I'll see you in the next video.